A Wyman walks into a bank carrying $50,000 in debt. The banker smiles. He offers him coffee, calls him a valued customer. Then, less than an hour later, another man walks into the same bank. No debt, no loans, no credit card balances. More than $500,000 invested. The meeting lasts less than 10 minutes, and when he leaves, the banker seems far less interested. Which raises a strange question. Why does the financial system seem to chase the people who need money the most and become less interested in the people who no longer need it? Because hidden inside every bank is a business model almost nobody talks about. And once you see it, you'll realize that some people aren't buying things. They're quietly selling pieces of their future. Hey everyone, I'm Sophia, and welcome to the channel. If you're someone who loves learning about money, investing, wealth building, and the psychology behind financial success, you're in the right place. Here, we break down complex financial ideas into simple, easy-to-understand stories that can help you make smarter money decisions. If that sounds interesting to you, consider subscribing and join me on this journey to better understand how money really works. One quick disclaimer before we begin. I'm not a financial advisor or a licensed professional. Everything on this channel is shared for educational and informational purposes only. Always do your own research and consult a qualified financial professional before making any investment or financial decisions. Now, let's get into today's video.
Meet Riven and Calum, two friends, same neighborhood, same school, same first job. At 24, they were making almost the same amount of money. Neither was rich, neither was struggling, and both believed they were heading toward the same future. But over the next 10 years, they would unknowingly choose two completely different lives. Riven loved nice things, not because he was irresponsible, because, honestly, who doesn't like nice things? A better phone, a newer car, weekend trips, a bigger apartment. Every purchase made him feel like he was finally becoming successful. And for a while, it worked. Meanwhile, Calum looked like the complete opposite. He drove an old car, lived in a smaller apartment, wore simple clothes, and every month he did something that confused everyone around him. He invested his money. Not huge amounts, just small amounts. Again and again. One evening, the two friends were sitting in a cafe. Riven looked at Calum's old car parked outside and laughed. Dude, you make good money now. Why are you still driving that thing? Calum smiled. It still works. Yeah, but don't you want something nicer? Of course I do. So why not buy it? Calum took a sip of his coffee. Because I'm trying to buy something else. Riven frowned. What? Freedom. Riven laughed. Freedom? Riven laughed. Freedom? From what? At the time, the answer sounded ridiculous. 10 years later, it wouldn't. A few months passed. Riven got a raise, and he decided to celebrate. He bought a new car. The dealership was beautiful. Bright lights, shiny cars, friendly salespeople. Then came the magic sentence. Don't worry, it's only $760 a month. Only. Funny word, because our brains hear $760, but they don't hear $9,120 every year, or $45,600 over 5 years. And if that same money had been invested instead, earning an average return of 8%, it could have grown to more than $66,000. One decision, a difference of tens of thousands of dollars. But Riven wasn't thinking about any of that. He was imagining himself driving home in a brand new car. And honestly, most of us would, because the human brain loves immediate rewards. A reward today feels more exciting than a reward 10 years from now. Psychologists even have a name for this, present bias. We naturally value today more than tomorrow. Banks understand this better than almost anyone, and entire industries have been built around it. Buy now, pay later, zero down. Only $760 a month. Notice something? They rarely show you the full price. They show you the monthly payment. Because monthly payments make expensive things feel cheap. Riven drove home smiling. He felt successful. He felt rich. But something strange had just happened. Without realizing it, he had sold a small piece of his future. Hold that thought, because this story gets much stranger. A few weeks later, Riven got a notification on his phone. Congratulations! Your credit limit has been increased. He smiled. The bank trusts me, he thought. Maybe I'm finally doing well. But that wasn't the reason. The bank wasn't rewarding him for becoming wealthy. It was rewarding him for being profitable. That's a very different thing. Around the same time, Calum received an email too.
Lower interest rates, premium banking services, exclusive offers. The man who needed money the least was being offered money at the lowest price, while the man who needed it most was paying the highest price. Strange, isn't it? And it gets even stranger. The average credit card interest rate today is above 20%, which means a lot of people aren't just buying products anymore. They're paying for products, plus years of interest. The financial system has discovered something powerful. People don't like paying large amounts of money all at once, but they don't mind paying smaller amounts over and over again. And that's where our story really begins. Because every month, Riven's paycheck arrived and immediately started leaving. Car payment, phone payment, insurance, subscriptions, credit card payment, furniture financing, a little debt here, a little debt there. Nothing looked dangerous by itself, but together, they were creating something powerful: dependence. Riven wasn't buying things anymore. He was buying monthly obligations. And monthly obligations are beautiful if you're the bank. Think about a gym membership. A customer who pays every month for 10 years is often more valuable than someone who pays once and disappears. Debt works the same way. Banks don't just lend money, they build long relationships. Relationships that can last years, sometimes decades. And every month, money quietly flows back to them. Interest, fees, payments, again and again and again. Meanwhile, Calum's life looked boring. No luxury car, no expensive apartment, no designer clothes. And honestly, there were nights when he doubted himself. He'd open social media and see his friends on vacations, driving new cars, buying expensive watches, building lives that looked exciting. And he wondered, am I missing out? Because delaying gratification doesn't feel powerful in the moment. It feels lonely. But then he'd open his investment account and see something beautiful. Tiny amounts of money, quietly growing, quietly working, even while he slept. He wasn't buying status. He was buying options. He was buying time. He was buying freedom. At the time, neither friend realized it, but one of them was becoming more dependent on money, and the other was slowly becoming less dependent on it. And that small difference was about to change everything. A year later, both friends got another raise. On paper, they were doing great, but something strange happened. Neither of them felt much richer. In fact, Riven somehow felt more stressed than before. How was that possible? Because every raise created a new expense: a better apartment, a nicer couch, more dinners out, another vacation, a few upgrades here, a few upgrades there. And suddenly, the extra money was gone. Studies have shown that most people quickly adjust to higher incomes and increase their spending shortly after. It's called lifestyle inflation, or, as some people call it, the hedonic treadmill. No matter how fast you run, you somehow stay in the same place. Riven was earning more than ever, yet every month he was waiting for his next paycheck. And then one night, he sat down and added everything up. Car payment, $760. Apartment, $1,900. Insurance, $220. Phone, $90. Subscriptions, $85. Furniture financing, $180. Credit card payments, $430. Total, more than $3,600 every single month. Before food, before gas, before emergencies, before investing. For the first time, he had a strange thought. What would happen if my paycheck stopped? The answer scared him, because those bills didn't care whether he felt tired or sick or wanted to quit his job. They wanted money every month, no excuses. Every payment had quietly become a claim on his future income. And here's where things become interesting. A large percentage of people would struggle to cover an unexpected $1,000 emergency, not because they don't make money, because so much of their future income is already promised to someone else. The car wants money, the landlord wants money, the bank wants money, the credit card company wants money. The future has already been spent. Meanwhile, Calum's life looked almost unchanged. Still the same apartment, still the same old car. But behind the scenes, something unusual was happening. His investments were beginning to grow faster, not because he had become a genius, because of time. At first, investing feels boring. You put money in, and almost nothing happens. Then something strange happens. The money starts making money. Then the money made by the money starts making money too, like a tiny snowball rolling down a hill. At first, it's almost invisible. Then suddenly, it's huge. One evening, Riven met Calum
home for dinner. You still have that old car, he laughed. Calum smiled. Yep, seriously. Don't you want an upgrade? Of course. So why not? Calum looked out the window. Because every upgrade has a hidden price. What do you mean? The monthly payment isn't the real cost. Riven frowned. What is? The freedom you give up to keep making that payment. Riven laughed. But this time, the words stayed in his mind. A few weeks later, he got another notification. Congratulations! You qualify for a premium credit card, higher limit, travel rewards, cash back, exclusive benefits. It felt like a promotion, like he had leveled up. But here's the strange truth. Credit card companies don't make billions because everyone pays their balance in full. They make billions because many people don't. The rewards are the bait. The interest is the business. And banks know something about human psychology. People love feeling rewarded, even if the reward costs them far more in the long run. Now the story takes another turn. One day, Calum opened his investment account. The market had crashed hard. Thousands of dollars were gone, just like that. For the first time in years, he felt sick. Had he made a mistake? Should he have just enjoyed his money instead? For a moment, he doubted everything. And that's important, because even disciplined people have moments of fear. Even investors question themselves. But then he remembered something. He didn't need that money tomorrow or next month. His expenses were low. He had savings. He had time. And time changes the way you experience financial problems. When you don't need money immediately, you can think clearly. When you do need money immediately, every problem becomes an emergency. A few months later, the market recovered. Then it kept climbing, and something clicked in Calum's mind. Volatility feels dangerous when you're dependent. It feels like opportunity when you're prepared. Meanwhile, Riven was becoming exhausted, not physically, mentally, because he couldn't stop thinking about money, the next bill, the next payment, the next raise, the next expense. He was making more money than he ever imagined, yet somehow feeling poorer. One evening, he sat alone in his apartment. Beautiful furniture, nice television, expensive car parked outside. And suddenly, a question appeared in his head. If all of this disappeared tomorrow, would I still feel successful? He didn't know the answer, and that scared him. Because for years, he had confused possessions with wealth. But wealth and possessions are not the same thing. A person can own expensive things and still have very little freedom. A person can look ordinary and quietly have complete control over their time. And that's when the biggest difference between the two friends started to appear. Riven needed his paycheck. Calum appreciated his paycheck. Those are not the same thing. One creates pressure, the other creates options. And options might be the most valuable thing money can buy. Because money isn't really about buying stuff. Money buys choices. The choice to leave a job, the choice to take a break, the choice to help family, the choice to sleep peacefully, the choice to say no. But something was about to happen that would force both men to see money in a completely different way, and neither of them was ready for it. 3 months later, Riven walked into work on a normal Tuesday morning. By lunchtime, he no longer had a job. The company was downsizing. Nothing personal, nothing dramatic, just bad timing. He packed his things into a cardboard box and drove home. For the first hour, he felt strangely calm. Then his phone buzzed. Car payment due in 6 days. The next notification arrived. Credit card payment due, then rent, then insurance, then another bill. And suddenly, he couldn't breathe. Because for the first time in years, he realized something terrifying. His lifestyle had never belonged to him. It belonged to his next paycheck. The next morning, he opened his banking app. The numbers looked different now. Savings? Not enough. Investments? Almost none. Emergency fund? A few weeks at best. Everything he had spent years building suddenly felt fragile. The expensive couch didn't help. The new TV didn't help. The nice car didn't help. Because when life becomes uncertain, possessions lose their magic. Security becomes the only thing that matters. For the first time, Riven understood why people lose sleep over money. Not because they're greedy, because uncertainty is terrifying. Meanwhile, on that same day, the stock market dropped again. Calum's portfolio fell by thousands of dollars. But he wasn't panicking. He made coffee, opened his laptop, looked at the red numbers, and then closed it. Because his bills were low, his savings were healthy, and his investments had time to recover. He wasn't fearless. He was prepared. There's There's a difference. That evening, Riven called him. I lost my job. There was silence. Then Calum said, come over. A few hours later, the two friends were sitting on the balcony. No speeches, no advice, just silence. Finally, Riven spoke. I did everything right. I worked hard. I got promotions. I made more money every year. So why do I feel like everything is falling apart? Calum looked at him for a moment. Then he asked one question. How many months could you live without a paycheck? Riven didn't answer because he already knew. Not many. Then Calum asked another question. How many of your monthly payments would disappear if your income disappeared? Again, no answer, because almost none of them would. The car still wanted money. The bank still wanted money. The credit cards still wanted money. The apartment still wanted money. And that's when the entire idea suddenly made sense. Banks don't lend you money because they believe in your dreams. They lend you money because they believe in your future paychecks. To the financial system, your future income is an asset, and debt is simply a claim on money you haven't earned yet. That new car, a claim on future paychecks. That credit card balance, a claim on future paychecks. That lifestyle you can't afford to stop paying for, a claim on future paychecks. Suddenly, Riven understood. The bank didn't love him because he was successful. The bank loved him because he was dependent, because dependence is profitable. A person who constantly needs loans, constantly needs financing, constantly needs credit, generates revenue. But a financially independent person becomes something else entirely. An option, a choice, someone who can walk away. That's why the financial world often feels upside down. The people who need money the most usually pay the highest interest. The people who need money the least often get the best deals. The less you need a bank, the better the bank treats you. Strange, isn't it? But here's the part almost nobody talks about. Banks don't actually want you to stay poor forever. That wouldn't work either. They want something much more valuable. A person with a good income, good credit, big dreams, and monthly payments. Someone who keeps coming back. A bigger house, a newer car, a refinance, another credit card, another loan, again and again and again. The relationship never ends. A few weeks later, Riven started cutting expenses, canceled subscriptions, sold things he barely used, stopped trying to look successful, started trying to become secure. It wasn't glamorous. In fact, it was painful because every financial decision has two costs: the money you spend and the identity you let go of. For years, Riven's identity had been built around looking successful. Now he had to build something different: freedom. Months passed, then a year. He found another job, but this time he lived differently. A portion of every paycheck went into savings. Another portion went into investments. Little by little, the pressure started disappearing. And one day, something happened. His phone buzzed. A bill was due. And for the first time, he didn't feel anxious. No racing thoughts, no stress, no fear. Just peace. It was a strange feeling because he had spent so many years believing wealth meant buying more things. But real wealth felt completely different. It felt quiet. A few years later, Riven and Calum met at the same cafe where they used to joke about the old car. Calum was still driving it. Riven laughed. You still haven't replaced that thing? Calum smiled. Nope. This time, they both laughed. Then Riven looked at him and said, I finally understand what you meant. What? When you said you were buying freedom. Calum didn't say anything. He didn't need to, because they were both feeling it. The freedom to leave a bad job. The freedom to handle emergencies. The freedom to take risks. The freedom to sleep peacefully. The freedom to say no. Most people think wealth is about owning more. More cars, more clothes, more expensive things. But real wealth is often the opposite. It's needing less. Fewer payments, fewer obligations, fewer things that own your future. Because every monthly payment quietly claims a piece of tomorrow. And every asset quietly gives back a piece of tomorrow. That's the game. Not income, not status, not appearances. Ownership of your future. And maybe that's the strange reason banks often seem to love poor people more than rich people. Not because poor people are weak, not because rich people are special, but because dependence is profitable and freedom isn't. So the next time someone offers you an easy monthly payment, stop for a second and ask yourself one simple question. Am I buying something or am I selling a piece of my future? Because the richest people aren't the ones who borrow the most money. They're the ones who finally stop selling their future to pay for their present.